Good afternoon, everybody. It's attorney Alexis Hart McDowell here, and I'm excited to get before you today to discuss our topic. So as you know, we've been going over LLCs all month long, really taking a deep dive to talk about their benefits to you as an entrepreneur. So today is going to be the last topic in that series, and we're going to talk about the tax advantages and legal requirements of an S corp, and we're going to talk about how an S corp can be directly related to an LLC. So first of all, as you know, I'm Alexis Hart McDowell, also known as the Enterprise Esquire. I'm a real estate attorney here in Chicago, handling your buying, selling, and investing legal needs. I also form businesses across the nation. So if you're in need of forming your business, whether it be an LLC, an L3C, a S Corp, a C Corp, whatever it is, reach out to us. You can get a free 15-minute consultation on my website, which is enterpriseesquire.com. Don't forget, follow me on social media. I give out great information every day. On Facebook, that's at Enterprise Esquire. On Instagram, that's at Enterprise_Esquire. And also, if you're looking for hard money here in Chicago, check out EpicImpactInvestors.com. So let's get started. So today's topic is the tax advantages and legal requirements for an S Corp. So first and foremost, I have to tell you all that an S Corp is not a business entity type. It's not an LLC. It's not a C Corp. It's not an L3C. An S Corp is actually an IRS tax designation. When you file the right form with the IRS, after you form your LLC or C Corp, you're essentially asking the IRS to tax that entity, whether it be the LLC or the C Corp, under subchapter S of the IRS code. So it essentially makes your LLC or your C Corp a pass-through entity, okay? Now, what is a pass-through entity? Under the IRS code, it allows for your business income, your losses, your deductions, and your credits to flow directly to your own personal tax return as a shareholder. You then pay taxes on that income at your ordinary tax rate. You do not pay federal taxes at the entity level. Now, one of the biggest advantages of an S Corp is the fact that you can save on self-employment tax. That's what everybody needs to know. When you form an S Corp, you can save on your self-employment tax, which is 15.3%. So you're already saving 15% on taxes when you form an S Corp. The 15.3% consists of 12.4%, which goes to Social Security, and 2.9%, which goes to Medicare. You are also able, and this is a big one, to take an owner's distribution through your S Corp, which means you're taking that money out directly and you're not paying any payroll taxes on that, but you only pay the taxes at your standard tax rate. Now, beware, because you can't take out all of the money as an owner's distribution. You know the IRS isn't going to have that. They have to get their taxes, especially the payroll taxes. So that's why we're going to talk about some of the requirements of an S Corp. And the first one is you have to pay yourself a reasonable salary. You can't take everything as an owner's distribution. So that is a legal and financial term, reasonable salary, and that's governed by the IRS. The reasonable salary has to be for your industry and your income. Now, example is that if you're an attorney and you make $300,000 in a year, right? But you only paid yourself $50,000. The IRS is definitely going to frown upon you, saying that you did not pay yourself a reasonable salary for an attorney in your industry based on the amount of income that you made. And they're going to tax more than what you paid yourself. That's the big requirement. You have to pay yourself a reasonable salary. Another requirement is you have to be a domestic corporation, meaning a domestic LLC or a C Corp. Remember, I told you S Corp is not a business entity. It's an IRS designation. So you have to form a business entity first, your LLC or your C Corp. You cannot be a foreign formed corporation and then ask the IRS for an S Corp designation. You're limited to 100 shareholders or less. Those shareholders must be U.S. citizens, but the IRS also allows specific types of trusts and estates and certain tax-exempt organizations to file. It's very, very limited, okay? You can also only issue one class of stock, and you cannot be an ineligible corporation. And an example of that is certain financial institutions or insurance companies. I'm going to share my screen because I want to really bring home for you how you save money as an S Corp. So this is a great picture breakdown of how you save money on a S Corp, forming an S Corp. So let's start over here. So we're going to start over here as a regular LLC income. Okay, that's what they're saying here. Regular LLC income. Let me turn my spotlight on. Oops. There we go. So this is just your standard LLC, right? You make $100,000 as income through your LLC by providing goods or services or whatever your business does, right? Now, all 100,000 of that income is subject to self-employment tax. Yeah, it is. Yep. And then you're going to have to report that on your personal tax return. And then all income is subject to your ordinary income tax. So we already said that the self-employment tax is 15.3%. So 100,000, you're going to take 15.3% right off the top. Then all that income is subject to your ordinary income tax. So now your income tax bracket could be, depending upon your situation, could be anywhere from 24 to 30 something percent, right? So add that to the 15. So if we take, even if we take a 21% tax bracket, 21% plus 15%, 36% of your $100,000 you just paid in taxes. You just paid that much in taxes. On the contrary, let's take a look at an S Corp. It's an S Corp now. Before it was an LLC, now it's an S Corp. So we have the same amount of income, $100,000. 40,000 of that we're going to pay as our salary because remember, we're required to pay ourselves a reasonable salary under the IRS code. Now, when you pay yourself a salary, those of you who have had jobs, you get a W-2 at the end of the year, right? So the Social Security and the Medicare taxes are taken out on a per paycheck basis. You can use Quicken, you can use Intuit, you can use Gusto, any type of payroll service, and they'll calculate what the Social Security and Medicare taxes are per period based on that salary. And then you sign up for electronic transmittal and it automatically transmits to the state and the federal government. $40,000 reported on your W-2. Now all of that income is subject to your ordinary income tax. So again, if we use the 21% tax rate, 40,000 is being taxed at 21% instead of where we had over here 21 plus 15, which was the 36%. Now, since we made $100,000 and we only paid ourselves $40,000, we had $60,000 of net business income. That's going to get reported on a Schedule K-1. And then you do not pay any self-employment taxes on that. And now that's subject to your ordinary income tax. That was just a quick share of how a S Corp can save you money. And a quick note, Tennessee, New Hampshire, and New York City, they all have an S Corp tax. So definitely talk to your tax professional to make sure that this is going to be the best entity for you as far as the tax savings and advantages if you live in those particular states. And again, that was Tennessee, New Hampshire, and New York City. Now I want to show you a little chart of tax savings. All right, so this is a little Excel spreadsheet. So if you have $30,000 in income, you're going to have $4,239 in self-employment tax. You're going to pay yourself, if you paid yourself a salary, you'd have $12,000, pay yourself $12,000 of the $30,000. Your payroll tax would be $1,836. You would send that off to, your state, feds, whatever's there. So the difference between the $4,239 and $1,836 is $2,403. That's an 8% savings. 8% savings on just a $30,000 salary. Now let's go down here to $100,000. Same amount of savings, 8%. You're saving 8% in taxes. Make 100,000 in income, you're going to pay 14,130 in self-employment tax. If you paid yourself a salary of 40,000, you would only pay 6,120 as your total payroll tax. And that's a difference of $8,010, which is a savings of $8,010. So as you can see, if you take a look at this chart, you can save quite a significant amount of money by changing to an S Corp. You just want to be able to have enough of a regular income to pay yourself that reasonable salary, which is why it's perfect for real estate agents, real estate brokers, anybody who has their own type of business in real estate who makes that type of income, a steady type of income. You know, an S Corp is going to be very advantageous for you. I want to go over a couple of the legal requirements to form an S Corp because, like I said, it's not a business entity. We have to do a two-step process in order to form an S Corp. So first of all, the law office of Alexis Hart McDowell, also known as the Enterprise Esquire, we form businesses all across the nation. So reach out to us if you're in need of an LLC, a C Corp, if you would like to go for S Corp status, if you want that L3C, so for social impact, reach out to us. We can help you. Our website is enterpriseesquire.com. You are entitled to a free 15-minute consultation. You have to schedule that online via the website, and you call at your appointment time. And we're going to discuss the type of business that you want to start or that you have already. And we're going to discuss a risk assessment. We're going to talk about what kind of goods or services that you're providing. We're going to talk about where you want your business to go and your possible exit strategy. So it's a very comprehensive consult to kind of help you decide what type of business is going to be best for you. An LLC is not best for every type of business. So we need to know that so that we can recommend something that's going to work for what it is you want your business to do. I want to talk to you about my LLC package. It is on my website. You simply fill out the form, you pay online, it comes to us, and we take care of everything on the back end. In that package price, the state filing fee is included. Specifically, the Illinois state filing fee is included. If you want us to file in a state other than Illinois, we will give you a quote. If that state filing fee is more than the state of Illinois, we will certainly send you an invoice for the difference. All right. We're going to clear your corporation's name to make sure that there's no company name on your state's rolls. We're going to file your articles of organization for you. We're going to give you a personalized operating agreement. It's going to include provisions that are going to protect the officers and directors from liability. All right. Next, we're going to give you form minutes for your first meeting of the LLC members. We're also going to secure that federal tax ID number for you or your EIN number. We're going to get that from the IRS for you. Lastly, we're going to give you an LLC operations guide, which is one of the things my clients love best because it's one thing to start a business. It's a different thing to know how to run it. So we give you a guide that gives you an overview on what you should be doing as the newly minted CEO, president, or officer of your particular LLC. And then, of course, we're going to turn all of this around for you within 1 to 2 business days, and you're going to get it in our beautiful corporate binder. I'm going to show that to you all now. Here's your corporate binder here. It's going to have your company name up here at the LLC. It's going to have your corporate documents in there. It's going to have a table of contents. We're going to have your articles of organization in there. We're going to have your operating agreement, your EIN number, the form minutes, and we're also going to have your operations manual, all right, to teach you how to properly operate and run your LLC with good governance. All right. So you're going to have your introductory letter from us. You're going to have your articles of organization. You're going to have your operating agreement. This is a very extensive operating agreement that we prepare for you all. You're going to have your EIN number in there, the form minutes, and then you're also going to have this LLC operations guide, a custom guide that we created for you all. So if you look at this guide, we talk about the highlights of your operating agreement. We're going to talk about obtaining your licenses and permits. Not every business requires one, but there are several businesses that require a license or permit, depending upon the state that you're in. We're going to talk about operations, finances, and dissolution if it comes to that. Not every business is meant to stay around in perpetuity. Some LLCs are formed for a specific reason, and when that reason has passed, that is when they dissolve the LLC. So as I mentioned, this is a very extensive guide. People love it. Lots of detail to help you out. All right, and be successful with your new business. That's everything that you get in our LLC package. It's just not something that we put a lot of fluff in. It is everything that you need literally to walk into a bank and open up a business bank account. And like I said, we will turn this around to you to 1 to 2 business days, depending upon when you submit it and depending upon your state. Thank you so much for joining me today. Today's topic was the tax advantages and the legal requirements of an S Corp. And then you saw how they tie directly to an LLC, because you have to have an LLC or a C Corp formed first before you can file for S Corp designation. And if you're looking to take advantage of these tax benefits of an S Corp, reach out to me, the Enterprise Esquire at enterpriseesquire.com. Schedule your free 15-minute consultation, and we look forward to assisting you. Thank you all, and have a fabulous afternoon.